This podcast includes information provided by the issuer and does not express the views of the interviewer. This podcast may also include forward-looking statements by the issuer that involve certain risks and uncertainties to its business. Because forward-looking statements are subject to risks and uncertainties, the issuer's actual results could differ from those indicated in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in to the Planet MicroCap Podcast. You can follow the podcast on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. You are listening to episode 12 of the Planet MicroCap Podcast. Before we get started with our next interview on the Planet MicroCap Podcast, I wanted to catch you up on what we featured on StockNewsNow.com recently. We featured articles highlighting video interviews with the following companies: Oramed Pharmaceuticals Inc., ORMP on the NASDAQ, Two Rivers Water and Farming Company, TURV on the OTCQB, Viatar CTC Solutions Inc., VRTT on the OTCBB, US Geothermal Inc., HTM on the NYSE market, and GTH on the TSX, Victoria Gold Corp., VIT on the TSX Venture, and SMTC Corporation, SMTX on the NASDAQ, as well as a Wall Street video interview with Brandon Mackie from Small Cap Discoveries. We also published articles from the MicroCap Review Magazine's Summer-Fall 2015 issue, the first by Nick Hodge titled The Beginning of a Uranium Turnaround, the next by Brent Cook titled Exploration Insights, Will Mining Boom Again? And the last by Elizabeth Koppel titled, What are the Best Targets for Activist Investors? For this episode of the Planet MicroCap Podcast, I spoke with Chip Maloney, frequent contributor to MicroCapClub.com, Brandon Mackie from Small Cap Discoveries, and Philippe Belanger from eSpaceMC.com. At StockNewsNow.com, we cover the microcap stock market on a global scale. We've done interviews with microcap management teams from China, Israel, Canada, Spain, just to name a few. And I wanted to learn more about investing opportunities in Canada. So after speaking with Chip, we thought it would be cool to conduct our first roundtable conversation on the podcast to discuss the microcap investing opportunities in Canada. We covered a lot of information during our roundtables, so I've decided to separate the interview into two parts. In part one, we cover each of the guests' backgrounds, why Canada, discuss industries associated with Canada, differences between Canadian and U.S. technology, and how each guest finds new Canadian stock ideas. Thank you again for tuning in to episode 12 of the Planet MicroCap Podcast. Please enjoy part one of my interview with Chip, Brandon, and Philippe. But first, a word from our sponsor.
A comprehensive streaming of market data, research, and portfolio management application for you. QuoteStream is a real-time streaming quotes and research system designed for the day trader, retail investor, institutional investor, both new and old. QuoteStream offers low-latency, tick-by-tick data, advanced charting, comprehensive technical analysis, news, and research. With no software to install and no servers to maintain, QuoteStream is the ideal solution for you. Go to StockNewsNow.com and start your free 7-day trial. Click the QuoteStream banner in the header or real-time quotes in the nav bar to get started building and managing your investments.
In this episode of the Planet MicroCap Podcast, I have Chip Maloney, frequent contributor to MicroCapClub.com, Brandon Mackie from Small Cap Discoveries, and Philippe Belanger from eSpaceMC.com on the program. Hey guys, welcome to the Planet MicroCap Podcast.
Pleasure to be here. Having us, Bobby. Yeah, thanks, Bobby.
All right, so to start off with this podcast for this episode, I want to get everybody's background and how you got into investing in microcaps. So, Philippe, let's start with you.
Yes, I'm Philippe Belanger, and I'm the co-founder and co-owner of eSpace MicroCaps. So my background, I've always been interested in ways to make money investing actively. It might not qualify as investing, but I started to accumulate capital playing online poker in my early 20s. I was playing part-time while studying in finance. Poker is a lot like investing. You have to make decisions with imperfect information, in a timely manner. So when a former colleague of mine introduced me to microcaps about 2.5 years ago, it caught my attention. I felt I could have a structural advantage over the professionals, which have much more capital than me, because of the relative illiquidity of microcaps. Plus, it seems like no one cared about profitable and growing non-resource companies. I started with 2 investments, and I multiplied my capital 5 times, and I was hooked. I was like, I love microcaps, and I want to get better at this. And I started a blog, East-Based MicroCaps, so I can share my investing ideas and educational articles about microcap investing. So that's about it.
Cool. And Chip, how about you?
Yeah, I've got a background in healthcare. I graduated from university in the late 90s, and when I started earning a paycheck, my first investment was in a tech fund right at the top of the bubble, and within about 6 months, I lost 50% of the value of that investment. And so it was cheap tuition, but I thought there's got to be a better way than this. So went to the library. One of the first books I picked up was a book by Janet Lowe on the wit and wisdom of Warren Buffett. And it took me about a half hour to flip through the book, and it just made perfect sense to me. And shortly after that, I was reading a quote from Warren Buffett. I think it was one of his annual meetings, and someone asked him a question about if he had to go back and start investing $1 million, what would he do? And his answer was basically similar to what he did in the early Buffett partnerships. He kind of started at the letter A and flipped through Moody's manuals and all the way through Z looking for mispriced small companies. And so from there, after that, the second thing that kind of cemented it for me, that microcaps were the place to invest, I read a book by James O'Shaughnessy. It was called What Works on Wall Street. And he's got a chapter in there that looks at the returns by market cap. And his study going back 50 years found that companies that have a market cap of 25 million or less tend to vastly outperform all the other deciles of asset classes and equities. So that kind of cemented it for me. And those were kind of my influences that steered me towards microcaps.
And you're also a contributor to the microcapclub.com, right?
Yeah, you bet. And also Philippe and Matthew's blog. I'm going to hack this. It's called Espace MC.
All right, and Brandon, I know we just did an interview in Philly, but for our audience that may not have watched it yet, what's your background and how'd you get into microcaps?
Sure. So I'm a chemical engineer by training. I was graduating my last semester in school. I was studying abroad, and I'd always really wanted to get into investing one way or another. And I started with Jim Cramer's books, which perhaps wasn't the best place to start for microcap value investing. But I bought my first stock when I was just weeks away from graduating. It was a rare earth metals company that's now bankrupt. So it wasn't off to a good start, but there was something that really kept me interested. And luckily, as soon as I got back from my last semester, and I picked up the essays of Warren Buffett, little green book that I read through in a matter of hours because everything in there just made so much sense. And I immediately changed course from what I had learned in my first few months and really focused on things that had just been sold off. So, stock was down 40% on some headline news. And it was a real business. I would buy into those kind of things, and 9 times out of 10 they would reverse. I would make some money. It got me interested, and I just kept at it, and eventually found my way into microcaps because there were a lot of bloggers that I followed that really advocated for them. And somewhere along the way, I said, hey, why don't I start my own blog? I think I'm getting the handle of this a little bit, and I started a blog called Motology, based on taking Warren Buffett's framework of companies with competitive advantages and trying to find them in the small niche parts of the market. And through that blog, developed a following, and ended up getting together with another investor up in Canada, Paul Andriola. We said, why don't we merge kind of what we're doing? He had a forum, I had the blog, into a newsletter. It's called Small Cap is finding Canada's next emerging growth stories. And somewhere along the way, I also worked at a hedge fund, so gained some experience doing that, and now focusing on the newsletter.
Cool. Hey, Chip, by the way, before we get into my next question, didn't you just write an article about moats? And I'm sure you guys have probably talked about that a couple times.
Yeah, I wrote that blog article. It's kind of the direction that I've taken over the last few years. Just trying to find good companies with solid competitive advantages, otherwise called economic moats.
Right.
And Charlie Munger calls it "sit on your ass investing" in it. So if you can find these great companies and just sit on them for the long term, it's just an easier way. You only have to make one decision. It's a buy decision, and you don't have to make two decisions and figure out when to sell them. So that's kind of the direction that I've gravitated in my investment philosophy.
Going on to the next question, and Chip, I'll definitely put in a link to that article, and maybe if we have time, we'll talk about it a bit later. But I wanted to talk about why Canada. I'm sure everybody's asking why are you even doing this blog episode? What's this all about? And what was interesting to me is meeting you guys and understanding that there's something about Canada right now. And so on that, I want to know why Canada and why should I, as a U.S. investor, be looking at potential good investment opportunities in Canada? So Philippe, we'll go to you again. So tell me, what am I missing out on?
Yes. Well, as an investor, I'm looking to invest in markets where I can have an informational edge and poor competition. I want to be in a market where I don't have much competition to source new ideas. So when I started, I quickly realized that I was finding most of my best ideas in Canada. So I decided to focus exclusively on the Canadian market. I remember reading a study from the Bank of Canada showing that Canadian equities were valued at lower multiples than its U.S. peers, even after adjusting for company-specific and market-specific factors. I think the study was published in 2003, but from my own experience, I think it's still true today. I can think of many U.S. companies that I know that are listed in Canada that are trading at lower multiples than their U.S. peers. It just doesn't make any sense to me. It's still a U.S. company. So, that's why I'm investing in Canada, and I'm not necessarily looking in other markets right now.
Hey, Brandon, so do you care to comment on that?
Yeah, so my situation, I'm U.S. based, live here in the States, and so it's kind of interesting that I've since sold all my U.S. stocks. I only own Canadian stocks. I really don't even look at U.S. stocks now, and I tell that to a lot of people, and they think I'm insane. But the reality is, the U.S. market is one of the most followed markets in the world, and many investors, say in Europe, they'll invest in their home market, but they'll also invest in the U.S. market. And so when you have that many eyes on the story, you're just going to have more efficient pricing. And as a value investor, trying to make outsized returns, efficiency is your enemy. And what I found is Canada gives you an ideal mix of inefficiency, less eyes on the story, but also you have, the same accessibility to management and, no language barrier that you would have in the U.S. And I can get on a flight and I can be in Calgary in the exact amount of time as it would take me to get to Atlanta or something, and I can go meet with management, I can do my due diligence, I can really understand the story. But a lot of times I'm planning to go see a company that has never met with an investor before. It's a small little tech company, nobody knows about it. So that's what I really love about Canada. It's the inefficiency combined with the accessibility, and how you can really understand the stories.
And if you're ever worried about a language barrier, you could always talk to Philippe. His French Canadian is really beautiful. So Chip, what did you have to say on the topic?
Yeah, I think I've been mainly investing in microcaps, mainly in Canada for about 15 years, and I think there's still definitely some inefficiencies in the Canadian space, more so than the U.S. I think it's got more efficient in the last few years, just with more eyes looking at it, but I think in general it's less efficient than the U.S. You also look at the main index index for microcaps in Canada is the TSX Venture, and it's down 80% in the last 4 years. I think investors like to chase performance. They just, they look at that down 80% and they just assume that, it's not a place that they want to look. So I think a lot of investors are throwing the baby out with the bathwater because there's a lot of really good little companies, great management that are trading on the TSX Venture and the two other indexes in Canada.
So, well, firstly, real quick, what are the two other indexes in Canada, just for our audience to know?
So there's the TSX, which is kind of the big board in Canada, and then there's also the smaller Canadian Securities Exchange. And so the CSE used to be the Canadian National Stock Exchange, and I think there's about 300 companies right now that are listed on there, and it's a cheaper way, I think, for companies to come public. The listing fees are less, and so they seem to be growing their listings quite rapidly.
Okay, so on to my next question, and this one, it's interesting because we used to go to these conferences all the time, and there are these resource and commodities, and those two industries have always been associated with Canadian listed companies. So what about other sectors like technology, healthcare, retail? I think, Philippe, let's talk about that first.
Yeah, it's true that the Canadian market has always been associated with resource commodities and also to the finance industry. This somehow explains why other sectors have been neglected, at least to a certain extent. Just to give your followers an idea, that there's around 60% of the TSX total market capitalization that comes from energy and financial companies. For the TSX Venture, it's 50% mining and 25% energy. So, yes, there are a lot of resource and finance companies in Canada. And what I'd like to say about this is, lawyers, bankers, brokers, they make money out of activity, not inactivity. And since resource companies need to raise capital more frequently than non-resource companies, especially profitable and growing microcaps, they don't need to raise money. So it's easy to understand that why we don't hear about them. And I think this is why we have an interesting opportunity in Canada for profitable and growing microcaps.
So, and Chip, you want to chime in on this?
Yeah, I don't have a whole lot to add to that, just that, outside of these mining, oil and gas, financial services, there's some really good little life sciences companies, real estate, retail, consumer industrial products, telecom, media. So there's, if you take, I think the TSX Venture has around 2,000 companies, and, if you strip out the resources in mining and if you don't want to look at financial services, you're still left with, a good 25% of those companies. So, on 2,000 companies, you're still able to look at your investable universe as 500 companies. So I think there's, outside of those kind of traditional sectors that investors look at the Canadian microcap space, there's still a lot of opportunity to invest outside of there.
And Brandon, you even said too, when you first got started, you invested in a junior mining company as one of your first stocks that you got into. So obviously you feel that probably this is something that, you've evolved from as well.
Yeah, absolutely. And I think, especially if you're just starting out as an investor, mining and resource companies, the skill set that you need to properly evaluate them is greater than what I feel for an industrial or a simple consumer product. I worked in the oil business for 3 years, and I never invested in a single oil company. And people, always ask me why, or they would ask me for tips on this company or that company. I would say, well, to really value an oil company, you really need to be more of a geologist than, a facilities engineer, which is what I was. And so, if you don't have that kind of skill set, I think evaluating more simple businesses, things that you can touch and feel, make more sense, and that's what I liked. And especially, in Canada right now, there's some interesting dynamics with the currency markets. So a lot of companies that are exporting to the U.S. could be industrial, consumer products. They have a 30% cost advantage by manufacturing and running their business in Canada, but they're able to use that as an advantage when competing in the U.S. for their products in the marketplace. So we found a number of companies that are really benefiting from those tailwinds and that fall outside of the resource space. So it's another really interesting dynamic that's creating some opportunities we're seeing right now.
Okay, so I want to focus on one sector in particular, which is technology. And I'm just curious, is there even really a difference between Canadian and U.S. technology companies? Chip, I'll go to you for this one.
Yeah, I'm not sure really. I don't do that much investing in the U.S., and so I'm not sure about that. But, if you look outside of microcaps, like if you look at the largest companies in the U.S. by market cap, it's dominated by the Facebooks and the Alphabets and Apple. And you look in Canada, and you look at the largest companies in Canada, and they're all either the banks or the integrated oil companies, the pipelines operators. And so, I think in Canada there tends to be more of these kind of technology companies that kind of fill niche verticals rather than kind of these dominant global players in multiple vertical markets.
And Brandon, you care to add to that one?
Yeah, I can say anecdotally, a company that we've invested in for our portfolio said that just the appetite for adoption of new technologies in Canada to them was more challenged than in the U.S. So when they would go out to trade shows in the U.S., folks were more open to hearing about new technology, more open to taking new risks with kind of unproven software solutions, whereas Canada, they tended to stick with legacy systems, and it was difficult for them to break in. So I think it creates its own set of challenges for Canadian tech companies who want to really prove out those early adopters and grow their business. In that it can be hard for a microcap to get off the ground. The flip side of that is there's a lot of opportunity. There's not going to be a lot of companies in Canada that can successfully grow their business like in the U.S., and there's less investors looking at them. So if you can find one of these niche companies that has created truly great technology and is resonating in the Canadian marketplace and outside of that, then in our experience, those can be very profitable situations.
Cool. And Philippe, do you want to add anything to that?
No, I think that Chip and Brandon provided a very complete answer.
Okay, so Philippe, I'm going to come right back at you then, okay? I hope you're ready, all right? I want to know, so how do you source new Canadian stock ideas?
Well, personally, it's only like I don't want to talk for Brendan and Chip, but I don't like to use screeners to find ideas. I only use screeners for special situations like distressed companies. For instance, one screen that I really like is to look for companies with market cap under 10 million that has revenues. And then I just go through the list and research these companies. And what I'm looking for is growth, high gross margins, hidden assets, maybe a new quality management team, a new business plan, potential operating leverage, factors that may suggest that a turnaround is happening. Besides that, there are many ways that I source ideas. First, each day I look at all the CEDAR filings. CEDAR is our Edgar in Canada. So each day I'm looking for quarterly or annual reports and looking for the same criteria that I just named. I'm looking for growth, and if I don't see anything interesting in the report, I just don't research the company. So each day I look at CEDAR filings. I'm looking at the new IPO listing, reverse takeovers. I'm trying to use all the information source that I can find. So I'm also networking on forum message boards in microcap conferences. like the one that just happened in Philadelphia. I was disappointed to miss it, but this is where you can hear about new ideas. And finally, if you're a hardcore microcap investor, my co-founder at eSpace MicroCaps, Aaron, used to look at the company directory from A to Z on the TSX Venture. He does that like once or twice a year, but he's like, if I really want to find a hidden gem, I have to dig, and the only way he think he can like make sure he didn't miss anything was to look in the company directory from A to Z. Each company, you go to you look at the latest MD&A quarterly financials. You go on the company website. You read the last investor presentation. It's not an easy job. You have to put a lot of time and energy in researching to find that little company that could make a difference in your portfolio. So this is pretty much how I do it.
So Chip and Brandon, and Chip, we'll start with you first. Do you guys have a similar way in which you go and source new ideas?
Yeah, definitely. When I first started investing in Canadian microcaps in kind of the early 2000s, I actually did what Philippe was just talking about. I started A and went through Z. I looked at every single public company on CDAR, including resource and mining, looking for anything interesting in the mining and resource space with maybe there was net cash on the balance sheet. So I did that. I built a watch list over the years, about 300 companies that I still follow, probably about 200. I think another thing, all three of us have built kind of relationships with other like-minded microcap investors over the years, and I would say these days I probably get the majority of my ideas from other investors and just trading ideas. All three of us are members of MicroCap Club, and it's a large contingent of Canadian investors on there. By the end of this year, there's going to be actually the subscriber feature for MicroCap Club, so it'll allow people who are not a member to willing to pay a subscription fee to view the same ideas that we look at. So, I subscribe to Paul and Brandon's newsletter. It's the only one that I subscribe to because it's high quality. There's a forum behind the paywall where there's a lot of smart investors discussing ideas. Philippe and Matthew's blog is fantastic, even though I speak a little bit of French, but Google Translate helps. And so they've got a great forum on there that a lot of smart investors. And in Quebec, there's some really smart young investors. They all seem to have poker backgrounds, which is interesting. But I think it helps when they are when they find a good idea, they are willing to bet on it. So beyond that, there's a few other kind of forums that I frequent, but I don't really post a lot on public forums. Seeking Alpha, I think, is another good source. If you're looking at a company, chances are there's a good chance that someone smart has maybe done a write-up on them. So those would be kind of my main sources.
Cool. And Chip, just to follow up real quick, because this is something that we've talked about a lot on the podcast, and that's with regard to watch lists. And, I want to get everybody's opinion on it too. And what does that mean?
Yeah, I keep it pretty simple for my watch list. I use just a free watch list on Globe Investor. I'm mainly just looking for news. I look a couple times a day. I'm not as diehard as Philippe, looking at every CDR filing every night. But sometimes I will do that. There's another publication I actually look at. It's called Daily Stock Watch, and they kind of do a summary of all kind of the important news that's come out. They keep close tabs on capital pool companies and shell companies, and so that's kind of my area of interest. But it's a 40-page daily publication. I'll usually scan that once a week, but usually my stock watch list is just mainly for news and just to see kind of what the stocks are doing.
And so, and Brandon, for your newsletter, what I'm curious about is how do you source new ideas for the newsletter that you guys put out?
Well, we use a combination it's been discussed, I think we're all like-minded investors, and we've really kind of all figured out the most profitable methods. I think we rely heavily on our network. One of the benefits of getting out and writing and sharing your ideas is people start to understand who you are as an investor and the kind of ideas that you might be interested in. And to the extent that people get good ideas from you, there's sort of they like to reciprocate, and so people will come to us with ideas, and so it's a very fruitful source. And a lot of times you can get in early before everybody else if somebody has a close relationship with the company or knows or if it's going through a turnaround. Getting tips, an idea that something is changing in the company that could make it interesting or something worth researching more. That's really what we like to rely on. We like to be really early to the stories, and so we tend to not rely so much on blogs or after it's been written up, or stock screeners after everyone has access to the data. So we really focus on our network and also on reading filings every day. We think that there's no substitute for that if you want the most accurate, timely information. And the great thing in Canada is if you keep your universe down from say the whole TSX venture down to only non-resource plays, you may be left with 200 to 300 decent companies that you can actually learn what all they do, the revenue levels, what's happening in the business. And so then when you're reading the filings, you can start to see the same companies coming up, and it almost allows you to have a blueprint for the whole space. And we really leverage that when making investment decisions.
Okay, guys. So as we're wrapping up, let's I'd like to know, where can our audience go and find more information about each one of you, where to follow you on Twitter. So Brandon, let's go with you while we're still talking to you. Where can people go and subscribe to your newsletter, and where can they follow you on Twitter?
Sure, yeah, we're at Small Cap Discoveries, kind of all strung together.com is our newsletter. We've got educational content. You can subscribe right there on the website. And our Twitter handle is smallcapdisc, so that's Discovery shortened. So you can follow us on Twitter and keep up with us.
How about you, Philippe? Where can we go and follow more information about eSpace?
On my blog, the address is espacemc.com, and I also have a Twitter, so this is how your followers can know more about me.
What is it? It's at eSpace, right? At eSpaceMC?
Yeah, right.
Okay. That's at ESPACEMC. And Chip, where can we go and follow you for more information?
Yeah, my Twitter handle, I don't tweet a lot, but it's at MicroValue. And I'm a guest contributor on MicroCap Club on the educational blog site there. And I'm a guest contributor on Philippe and Matthew's eSpace blog. I've been promising Philippe an article for 3 months here, so I'm going to get around to it the next week here. So,
well, that was my fault. It's because I've been hammering you to get on here for the podcast. So, Philippe, it's my fault. All right, guys. Well, thank you so much for coming on to the podcast. Have a great weekend, and I look forward to seeing you all soon.
Sounds good, Bobby. Thanks a lot.
Yeah, thanks, Bobby.
Bye.
Thank you all for tuning in to the Planet MicroCap Podcast, and thank you, Chip, Brandon, and Philippe again for coming on to the program. You can access the podcast by going on to stocknewsnow.com under podcast, go to podbean.com and search Planet MicroCap Podcast, or on iTunes and search Planet MicroCap Podcast. Stay tuned for the next episode of the Planet MicroCap Podcast, where we'll have our next week in review and finish our roundtable discussion in part 2. If you have any questions or comments about the podcast, please send an email to info@stocknewsnow.com. I'd love to hear from all of you. This podcast has been brought to you by SNN Incorporated, publishers of StockNewsNow.com, the official MicroCap news source, and the MicroCap Review magazine. I'm your host, Robert Kraft, and thank you again for joining me on the Planet MicroCap Podcast. Happy Thanksgiving, everyone.